YouTube, it's Todd Horst here with Tasty Tracker, and I have another small account challenge update. These were trades for yesterday. I didn't actually get time to record this last night. I'm sure I'll get some people, claiming I am messing with something or something like that, but you can look at all my previous videos and see I open and close my trades right on time, except for I made another mistake and I never closed out this sedge. So when I opened up this sedge the other day, I was looking at my portfolio and I noticed two positions, and in the small account challenge I very rarely have two for the same ticker. So sure enough, I went in here and did a search for sedge, and I had closed it out. Let's go to filled and filter. I closed the last one out for 82 on 10/7, and just simply forgot to write that in. So that is on the note there. If we go into history, I noted that I missed closing it, and it was actually done on 10/7 for $82. So that was a net gain of 192 that I missed, unfortunately. So again, apologize for that. And then since I did the video on Monday, on Tuesday I had the Disney closing, which was a great call. That one was only open for 7 days, and I walked away with about 25%, $80 profit, which is what I'm looking for after commissions per $5 wide spread. $80 is typically what I'm aiming to walk away with. So if I get a fill for something like 140 instead of 160, I might hold it a little bit past 50% just to get that $80. And again, that all depends on how I'm feeling with a ticker and the days to expiration, those kind of things. So obviously with options there are many variables, but on the whole, that's what I'm looking for, $80 walkaway. So yesterday I ended up opening Apple and SE. We can see when I did the update on Monday, I had closed the Apple position. And so typically what I do is I have a position open, and there's a spike in that stock and it automatically closes my position, and then I'll give it a couple days, and by that point it has built a new base, or maybe it's retraced, and so after a couple days it's typically okay for me to get back in the stock, and that was the case here, my opinion, on Apple, that I thought it was a okay time to enter back in. So that's why you'll see me playing the same tickers over and over again. I don't think options need to be, they're already complicated enough. You don't need to make them any more complicated by trying to get really snazzy with all the different tickers that you can. I do some of those bets on the side. I don't publish those because they're riskier and I don't want to set a bad example, we'll say. And not in this account, I should say that too. You're seeing everything in this account. But for when you're just starting out, and this is what this is about, a small account, $2,000. It's about playing a small set of stocks that you become intimate with, familiar with, comfortable with, and they are good quality companies that are long-term trending up. That's all it is. And we can see I took this account from 2000, currently sitting at 6,100. Of course, SPY's been down the past 2 days, so that affected the count for sure. I think I was up to 68, somewhere in there. But anyway, without further ado, we'll get into these two new positions. The two new ones are SE and Apple, as I said. Both are for the October expiration. No, both are for the November expiration. Let's go over to the options tab so I can see better. Yeah. So both are for the November, excuse me, which are, so they were 37 days when I put them on. I have my entire portfolio on November because I'd rolled a couple out. So you can see this little one here beside Amazon, PDD, Facebook. Those are the ones that got rolled from the previous expiration over to this expiration. So once we get down to 30 days, I will stop putting positions on for November and start putting them on for December. But at this point, I only have 750 in cash, so I won't be putting on any more positions until some of those positions come off. So let's go over to the portfolio tab so we can see what we've got here. Overall, the account payoff diagram looks great. And if we go through each one of these individually, they all look rather good for this expiration. BDD was the closest one to the edge so far. Facebook's a little close, but still definitely profitable. So there you go. All of the tickers are positioned well for expiration. At this point, we just need some time to decay the positions so that they can come off. Okay, so let's get into the two tickers. SE, okay, it's down here, and I sold the 160. So I'll go over to the chart. So I don't actually have the 160 line on here, but we can see right now it's trading at 167. There's a support level that goes the whole way back here to early September at 163. So the thought process there is my sold leg is below that, as well as the 20-day SMA here is at 160 right about, and then the 50 days at 150. So hopefully it doesn't get that far. As you can see here, it did bounce off the 20-day, just as I would want. And RSI and MACD look pretty fine. RSI looks good. This is a hot zone. Once we get into the really overbought, then that you want to potentially consider getting out, but I wouldn't consider shorting or anything like that. This is just a indication that that current run might be running a little bit long in the tooth. But MACD is starting to peter out, but that doesn't, as soon as these cross, that doesn't mean it's going to plummet. That just means maybe we'll get some sideways chop like we have in here, where basically it's trading in a $10 range, $5-10 range, and not making any progress. So I think we're building support here, which is great. And as long as we remain above that support, then I will be profitable. So next ticker is Apple. Let's go see what the sold leg is there. Sold to 115. Okay, so there again, we're sitting at 120. We've got the 20 and 50 day both right around, well, 50 days at 117, 20 days at 115. So obviously you can't see me pointing to the screen, but you can see right under the Apple logo, there's the red and blue buttons, and then there's a volume, and then there's the SMAs, 50, 100, 20. And so I can look at the first yellow number, 117, 116.91, and the purple number, 114.73. So it will, obviously, if you're new to charting, as I hover over these different days, it'll change. But if I have it anywhere over here in this margin, it will show the current positions. So anyway, so being that I sold the 115 and the 50-day, which is actually should be stronger support than the 20-day, is at 117. That bodes well, and we can see that it did bounce off of it there again today, just like the other position just showed an SE. And the 20 days catching up. So in the next, I don't know, 5 days, if it continues to find support on the 50-day, we will see the 20-day crossover, and that would be a bullish indicator and could help the stock go further up. But we can see historically here, it's stayed on the 20-day the whole time. And 50 days really acted as good resistance. It hasn't even had to come down and touch the 100-day. This is Apple we're talking about here, so they're always a fairly strong stock. Got earnings coming up, and then they just did the iPhone 12 announcement. That's behind us now. So yeah, I don't really see much downside at this point. I'm expecting earnings season to go well, this upcoming one. So we'll see if I'm right or not. But if that is your interpretation of where the market is at, then putting on positions now, knowing that you're going into earnings, if you're willing to accept the earnings risk, is a good idea because you can collect on higher volatility and then the IV crush after earnings are announced. Of course, I had a Bank of America position that I just closed. They had earnings and had a miss. So I'm not sure if their stock actually. Yeah, yeah. So there, it did react badly to the news. Not terribly, but I had a covered call, and I had sold the 20. No, I had um, a, a naked put. I sold the 25 put, and so I actually closed out right as soon as we crossed over here for a nice profit. It wasn't anything insane, but it was enough um, to walk away with a profit, and it had tied my collateral up for a while. So I had, put it in somewhere down in here, I think. Anyway, that's not the point. That was for another account. So you could say that this earning miss. I hear it saying the beat estimated 49, standardized 51. But in my Thinkorswim mobile app, it was saying that they missed. Doesn't matter. Um, so anyway, obviously earnings, there's risk for this kind of thing, but a lot of times, especially if you position your strikes accordingly, like if you would have sold the 23 put here, you would have collected a lot of premium, especially if you did it in down here. But even up here with the increased volatility, you'll get a pretty decent premium, and then there's still room for the stock to move. So definitely give yourself a little bit of a wider margin on earnings. But as an option seller, especially if you're doing a risk defined, there's what your max risk is. So anyway, all right, I don't want to keep rambling. I think that's all I have for today. Thanks, and let me know if you have any questions.